P2P cycle, as it is called, the procure-to-pay cycle. To pay cycle, okay. It starts with the process of procurement, okay. But then on the backdrop, there are some other aspects, okay. Like, there are multiple departments, okay. So for our example or our business case understanding, we will take Tata Motors, okay. So for Tata Motors, there is a manufacturing department, okay. This manufacturing department requires materials day in and day out, okay. So that is where this manufacturing department, they would go to the stores, that is the warehouse, and ask them for certain items, or place a request for item, okay, with the stores. So their warehouse or inventory department, with them they will place the request. Okay, so in ERP there would be some document that they might be raising on in ERP, or for that matter digitally. Okay, let's say they have some internal systems. Okay, in any case, there is a requisition document. Okay, there is an underlying document that is being raised. Okay, or prepared and sent to the particular inventory department for the request that they have for the item. Okay, that is called requisition. Okay, now this request is being placed to the inventory department, and then inventory department, they would do what? They would check their inventory or warehouse for that availability of that for that item. Okay, warehouse to check for availability of that item. Okay, now let's say, for example, if they have a item available, then they would immediately send it to the department, manufacturing department, as request fulfillment, okay, or requisition fulfillment. But let's say, for example, if they don't have that item available, okay, that is when the entire procure-to-pay cycle starts. Okay, so if item not available, then warehouse would what? Warehouse will place, okay, a request with procurement department. Okay, because now the item needs to be procured since it is not available in the warehouse. Okay, procurement department will do what? Procurement department in turn will request for quotation from third-party vendors, or I would say just suppliers of the item. Okay, so in the market there would be many suppliers, okay, that are dealing in the same item. Okay, so they would actually send a quotation. Okay, they would actually request for a quotation from the suppliers, from many suppliers that are there in the market. Okay, to get the quote on the price, as well as the quality. Okay, the quality standards. Okay, so for that they will send out a quotation. So this quotation, once it comes to the procurement department, okay, they would finalize one supplier who meet out their the procurement department's condition. Okay, so basically the quality of the quality standards of the product matches as per the requirement, and similarly the best price that is being offered, okay, to them. Okay, that supplier they would finalize. Okay, finalize the supplier with the best mix of quality and price. Okay, once that supplier is finalized, procurement department, okay, procurement department will send the order, okay, which is called the purchase order. This is when the cycle starts. Okay, so the purchase order being placed, okay, is sent to the supplier, and with the necessary terms saying that we need the items on so and so date, or within so and so date we need the item. Okay, so there are certain terms and conditions that are placed, and then again this particular purchase order document will mention a lot of other aspects, like where they want the delivery of the item to be there, Okay, similarly, it is not that the procurement department's office that they will send out the item. Definitely there are warehouses or multiple warehouses where they would need the items to be delivered. So that is nothing but the location, okay, or the shipment details as it is called. Okay, so those details, everything will be mentioned. Similarly, the quantity, the unit price of the item that is finalized, all those things would be mentioned on the purchase order document, and it will be sent to what? It will be sent to the supplier. Then on a particular day, as per the terms of agreement, the supplier would fulfill, okay, or will send out the items to the business location, the warehouses, you can say, or the staging areas. Okay, so that is when the process of receipt starts. Okay, so receipt of the item. Supplier sends goods and is received by the business in their receiving area. It is not directly sent to the inventory. It is not directly sent to the inventory. It is actually, first of all, those items, okay, basically which the supplier sends, are received in a place called a staging area or a receiving area. Where what is the next activity that happens? The next activity that happens is the inspection. Inspection of the items received. Receiving area. Okay. Inspection of the item starts. Now then, based on the inspection, and based on the goods receipt note and the different details mentioned on the items. Okay. So what is the document involved at this receiving stage? It is the receipt, or as it is called in business terms, it is called GRN. GRN stands for goods receipt note. Okay, so that would be the document which would mention the details of the items that are being delivered. Okay, so the inspector basically will check, cross verify, or as per the goods receipt note and as per the purchase order that was placed. Okay, they would verify or inspect the goods that have come up. So in order to check whether there is any damage or whether there is any inferior quality goods or anything that is not as per the purchase order, and the goods receipt note. If something is mismatched, okay, all those things they will verify and validate. Okay, in that sense, or from that point of view, some of the items, some or all items are received, and the others that are not received are sent back. Okay, not received are returned. Okay, so there is also a process and activity that happens. Okay, once the items have been, let's say, verified and everything is in order, they would stamp out the saying, the inspection has passed. And now it is, the next stage would be to place it in the warehouse. Sorry. Okay, and from there, then two process starts. Okay, after the receipt of the goods and after storing it into the warehouse, or simultaneously, I would rather say, but after the completion of the receiving phase. Okay, two processes start. So one is what? One is the payables process, and the other one is the item requisition fulfillment process. Okay, so the warehouse team, they would fulfill the items that whatever was raised, whatever requisition was raised by the material department earlier. Okay, so they will send out based on that item requisition. They will fulfill those. They will send out that item to the material department. That now all those processes basically are covered as part of the supply chain aspects. Okay, but since we are training on the financial aspect, that is where we need to understand this particular process, which is the payable process that happens after the receiving and storing of the items in the warehouse. Okay, so inventory organization basically. Okay, so that is when the next process that we are concerned with, that is the payable process, it starts. Okay, so in the payable process, what happens is, once the items have been received and goods have been received, simultaneously the invoice also would be there. Generally, majority of the suppliers, they tend to actually send the invoice also together. Some of them they send it, some of them they might send it via email, okay, directly to the payable department. So whatever the case is, the payable department, okay, the payable department will receive the invoices. Receive the invoices, and they will start with the invoicing process. That the first next step would be book the invoice in ERP by matching against the purchase order or receipt that was created. So depending upon the control aspects laid down as per the business policy. Okay, so some businesses, they might be okay with matching the ERP again, matching the invoice against the purchase order. Okay, so but some of them are very process oriented businesses, okay, where they are very strict on the processes that are followed. So they might want that there is a control in such a way that only after the receipt of the items, the invoice should be booked and the ultimate financials should be impacted. Okay, so only after the receipt of items. So that is where the matching controls, okay, matching controls in the ERP would be configured in such a way that only after the receipt, the invoice matching can be done to the, or invoice booking can be done, or final booking and accounting of the invoices can be done in ERP or the payable application. Okay, so these are the controls that the businesses would want according to their business policy or the practice. Okay, so the booking of invoice will be done by the payable accountant in that order, and then finally, once the invoices have been booked, okay, and upon due date, the payment for the invoice or payment against such due invoices would be released to the supplier. Okay, so this is the entire procure to pay cycle from the start. Okay, so procure to pay cycle basically would start from this stage where the purchase orders are, since the time the purchase orders are issued. So purchase order will be created in ERP, okay, in Oracle ERP under the procurement application. Okay, this purchase order will be created. Similarly, under the procurement application itself, the receiving will be entered. Okay, so whatever has been physically received, that has to be entered in the system as well. Okay, so that is where a receipt will be created against the purchase order, where all the details would be mentioned, okay, related to the receipt. And then once the receipt has been done, okay, the next step of delivery to the warehouse will be done. And then after delivery to the warehouse, the process of payables would start, where the booking of invoice would happen. Okay, now coming from the accounting perspective, so this was all the business process flow from a transactional perspective. Okay, with respect to the transactional perspective, on the backdrop, there are financial data that are being recorded, right? So therefore, accounting is something that will happen in the backdrop. Okay. Okay, so that is where it becomes, since we are training for the financial aspect, so it becomes necessary for us to understand the accounting also that happens, for each of these processes. So in purchase order, at the time a purchase order is being raised, okay, there is no accounting that happens in the ERP. Why? The reason being, purchase order is just a document, okay, that has been raised to place the order. Okay, from an accounting perspective, when does it, when does a financial obligation starts? Only when actually you receive the items in your business. Okay, when the supplier basically sends the item and you receive it, okay, in your premises, that is when basically the obligation towards the supplier starts. Okay, until that time, you haven't actually, there is no transaction. You can say from a monetary perspective, from a monetary terms, if you look at, until the time the receipt is not there, there is no transaction with the supplier. Okay, so there is no obligation, basically, to be very precise, there is no obligation that is in place yet until the time the receipt of goods has not been done. And that is why when purchase order is created, there is actually no accounting entry that happens. But as soon as you create a receipt in the system, that is when the accounting starts. Okay. So receipt, as I mentioned, it is something that is done in a receiving area. Okay. It is not yet converted into a stock of the business. It is not yet converted into the stock of the business. Okay. So that is why it is key to understand what is the accounting that happens when the receipt of goods is being done. Okay. So there is an entry that happens called receiving account debit to inventory or expense accrual account. Okay. So basically the obligation is being accrued. Okay. So you are now obligated, okay, to the supplier. Okay. So that is why inventory or expense accrual is credited. It is liability. Credit is liability. This is a liability account. Okay. But then this is an obligation, and that is the reason this is the accounting that will happen. And receiving account debit, why? Because it is in the receiving area. It has not yet been converted into a stock. Okay. And that is the reason it will not be part of the material valuation yet. Okay. So it is kind of, in transit stage. And that is the reason this is a temporary account where the balances related to those goods are accounted for. Okay. Now, once the delivery happens, delivery to the inventory. Okay. So I would say deliver. Okay. So when the delivery happens, there is an accounting entry that happens for the delivery aspect also. And that is when basically, delivery means it is now stored in the warehouse as a stock. And that is where material valuation. Okay. Material, or as it is called also, inventory valuation. Valuation account is debited, and the earlier receiving account, that where the temporarily the balances were stored, okay, that gets credited, that gets knocked off. Okay. Earlier the receiving, whatever was done, that was a temporary account where it was parked, and now it is credited and it is knocked off, and actual material valuation or inventory valuation account is debited. Okay. So this is now an asset for the company. Okay. And hence it is stored as a material valuation account. So this material value, this will be what? This will be an account in your chart of accounts under the assets. So now just go back to your previous sessions, okay, where we had, created the natural accounts, right? In the natural accounts, we had the categorization of asset, revenue, liability, XYZ, right? So material or inventory valuation account is part of the natural account where there would be a asset based. So the type that would be associated to that account will be asset. Why? Because that is an asset for the company. And this one, inventory or expense accrual account, that is an obligation which will be converted into a liability in future. Okay. So the common nature of it is liability only. Okay. So from natural account perspective, this is going to be created as part of the natural account, liability based account. But then from a accounting perspective, if you look at, this is just an obligation, and that is why it is accrued, as we say. This is an accrued obligation, which will become a liability in future when actually you receive the invoice. So once you receive the invoice at this stage, okay, from the supplier, and you book it, that is when that particular accrual obligation becomes your liability. Okay. So that is when you match the invoice against the purchase order. Accounting entry that would happen as inventory / expense accrual account debit. So earlier that was accrued, that will now get knocked off, and the actual supplier liability account will be credited. Okay. Actual supplier liability account will get credited. So that is where now your obligation has converted into a liability. You are liable to pay to the supplier. Okay. Because now there is an underlying document that makes, or that holds you liable for the amount to be paid. Now on the due date, when the payment is being made, okay, there is also an accounting entry, because that is also a financial transaction which has a monetary impact. What is the accounting entry that will happen? Now your supplier liability at the time of payment, what is happening? Your supplier liability is getting reduced. Okay, your liability basically is getting reduced. So that is where supplier liability account will now get debited. Okay, because it is getting, your liability is being reduced. Okay, and what is flowing out of your business? It is the cash, okay, that is flowing out of your business. So in a normal scenario, it would be the cash or bank account, basically, because why? Your cash or bank account is being reduced, your asset is being reduced. Okay, that is why this will be credited. Okay, in Oracle terms, this would have been a case when in a normal scenario, when you are doing a books of account, this would be the accounting entry. But in Oracle, there is a stage, or there is a feature that is available even to record the in transit cash or bank balance. So what do you mean by in transit? Okay, so basically you issue a check, let's say, as payment to the supplier. Now this check goes through a certain transition phase. Okay, so now the check will be received by supplier, and then supplier will send it to bank, and then bank will take some days to clear it out. Okay, and then finally only after some days, basically the cash or bank from the bank balance will get reduced. Okay, so the time period, in order to have a clear indication in your financials for this particular time period, from the time the payment is issued from your business till the time it is cleared by the bank. So in order to have a in order to capture the significance of, or the backdrop of that particular transition phase, Oracle has a feature where you can record it in a temporary account. Okay, in order, so that anytime that the financial statements are published, a person looking at the financial statement can easily identify that this sum of money is still in transit. Okay, it has not been reduced from the bank. Okay, so they will, just by looking at it, they will be able to understand that aspect. So in order to have the effect of this transition phase, the accounting entry would be parked in something called as a clearing account, or as it is called, a cash clearing account. This is again a temporary account, okay, where the balance is parked, the in transit balance is parked. Okay, and then once bank clears it, okay, so what would be the indication of the bank having cleared it? A statement will be generated, which is called the bank statement. Okay, bank statement will be generated, and we will reconcile, and reconciliation of the payment against the statement will take place. Okay, will be done, I would say. So this is a business process, basically. So every fortnightly, or every week, or maybe every day also, businesses, they would do this reconciliation. At the end of the day, they would log into their bank account, okay, digitally, or they will ask the bank to send a statement by email, and then the accountant would basically check what all payments have been issued from a system, that is from your business, that will be recorded in ERP, what all from them has been cleared by the bank. Okay, so all those payments that have been cleared by the bank, you will reconcile it. Okay, so there is a reconciliation process which happens in the cash management module. Okay. Okay, so at that point of time, when the reconciliation happens, that is when it is confirmed that the bank balance, or the cash balance has been reduced finally. Okay, so that is when an accounting happens, which is called cash clearing account, that was earlier credited will now get debited to knock it off, and the actual cash or bank account will get credited. Okay, that means it has that much amount of cash or bank balance has got reduced. from your asset. Okay. Cash and bank is the nature. What is the nature of cash and bank account? It is asset. And by our understanding of the concept, every asset needs to have what? A debit balance. Okay. But now when an asset is being reduced, that is when that particular asset will be recorded as a credit. Okay. That means there is a reduction. Okay. Or there is a deduction. Okay. So that is where cash or bank account is now credited. Okay. So this is the entire accounting cycle that happens when there is a P2P, entire or complete P2P process. Okay. From procurement, from purchase order creation till the time the payment is cleared from the bank. So this is the accounting entries that happens in the entire flow. Okay. Now there is another type of procurement also. Not for all kind of purchases that you make, you will have a purchase order. Okay, what is that? Example. So basically, the services related to electricity, similarly water related services, or for that matter, insurance. Okay, or for that matter, similarly, what else can we say? Rent. Okay, rent that is being paid to a landlord. Okay, similar, all those things are kind of real life business scenarios where generally purchase orders are not placed, because this is not an item for which you are placing an order. Okay, these are kind of services, again services for which a purchase order is actually not required. Okay, it is just a ad hoc basis the services are granted, and for which or a monthly basis the services are granted, or provided to you, and then for that an invoice is being issued by the vendor. Okay, this is also a supplier related activity. Okay, supplier payment related activity, supplier invoicing and payment related activity, and hence those kind of cases also will be recorded as part of the payable module. But only difference is the procurement module or the procurement team is not getting involved. It is directly between the supplier and the payable department that the transaction is happening. Okay, and hence no purchase order document or no purchasing related cycle will be there. Directly the thing would start from booking of invoice in the payables. Invoice booking, and then the resultant payment process. Okay, so this is directly the stage in which that will happen. So for that, in Oracle, the terminology that is used for such cases is unmatched invoices. Okay, why unmatched invoices? Basically, there is no PO that is there or receipt that is there against which the matching can happen. Okay, and that is the reason it is called unmatched invoices. But the earlier one, the procure-to-pay cycle, for that the terminology is used matched invoices, or we would say PO matched invoices. Okay, so these are the higher level, on a higher level, this is how the categorization is done in payables: unmatched invoices and matched invoices. So it is very clear from the terminology itself, like unmatched is meaning there is no purchase order processes underlying, purchase order documents or receipt documents. Rather, it is directly a expense that is without a purchase order, and hence it will be directly booked in the payables. There would be no preceding activities there. Now, in such case, what is the accounting entry that will happen? Okay, since there is no purchase order and hence there will be no accrual involved. Okay, there will be no accrual involved. Rather, it will directly be the case where expense will be booked here. So let's say, for example, it is a electricity expense for which the invoice was given to you by the supplier for the expense for the electricity services. Okay, so that is where you will book the accounting that will take place is electricity expense account debit, because that is an expense. And what is the nature of the expense? Debit is the nature of the expense. Okay, and what will be credited? Supplier liability will be credited. Why? Because we are now liable to pay to the supplier. Account will get credited. And then for payment, issue and clearing, the following, the steps that we had seen earlier, the same thing will follow. Okay. the same process will follow. Supplier liability at the time of issuance of the payment, supplier liability account will get debited and cash clearing account will get credited. And then at the time of clearing, that is against the statement reconciliation process, cash clearing will get debited and cash bank account will get credited. Okay, so this is the accounting that will be followed in case of unmatched invoices. Okay, so this is just a overview that you had to have an understanding on, so that moving forward, when we look at the transactional aspects, okay, you would be able to relate to these things. Okay, so that is where we, we have gone through this overview process. Okay, any questions until now? No questions? Okay.
No.
All right. Just give me a minute. I need to have a glass of water. Okay. So this was the entire business process, or on a general terms, okay, or a generic, from a generic point of view, generic process point of view, this was the business process flow. And in terms of that, what or how the processes are even carried out in Oracle ERP, okay, that we have understood. That there are many other case scenarios, so case by case, certain changes would be there, but I'm not going into the in-depth of those aspects because it will only confuse you at this stage. Okay, so that is where just to have an understanding on these aspects, or this basic process flow. Okay. Now, from the system perspective, okay, the payable module, okay, basically works on the underlying enterprise structure, that is the business unit. Okay, so all the configurations that you do for the payable module is being done on the business unit level. At each of the business unit that is engaged in the accounts payable activities. Okay, so for those business units, you will have to create the setups, or you will have to do the setups. And even the data security is controlled at the business unit level, similar to in case of general ledger. Okay, how was the data being recorded, or at what level was the data being recorded at the ledger level, right? It is within the ledger that the financial data was getting recorded, and at what levels within the segments, at the accounting segments level. Okay, the data was getting recorded. Similar way, in case of accounts payable, okay, the data basically is recorded for each business unit. Okay, and then the security also in turn is managed based on each business unit. Like we had the data access set, which had the ledgers, the specific ledgers under it, right? The same way in here, it is the business unit wise, the data security is also managed. Okay, but the accounting happens based on the ledger. So that is where you will see the linkages being established between the business unit and the underlying ledger in which the accounting needs to happen for the transactions that are being performed. That you will see the linkages as well. Okay, so let us see the setup activities or the setup tasks. So the first step in the process is to create the business unit. Okay, so right now we are just going through the flow of the setups, but actually business unit will be created as part of the enterprise structure in the initial phases of the implementation itself. Okay, why? Because that is the structure which is in place, and it is a sorry, it is a shared architecture. Okay, the enterprise structure is a shared architecture across all the streams, whether it is human capital management, whether it is financial management, whether it is the supply chain management, or for that matter, the business intelligence. Okay, or for that matter, the projects. Okay, project management area. So for all of them, this enterprise structure is a basic structure, and that is the reason, from an actual real life implementation perspective, the business units are created in advance. Okay, and then the respective functions are associated to it. Okay, so business unit that is created will be used by the HCM team, as well as the financial team, as well as the supply chain team. Okay, in order to enable their respective module functionalities. Okay, but now we will see creation of the business unit, okay, as part of our understanding for the AP module. So first step, creation of the business unit. So how can you create it? What is the task name associated to it? Manage business unit is the task name associated to it. Okay, so that is again from the setup and maintenance. We will go into the financials first, and then go into the manage business unit task. Okay, so going to setup and maintenance. Financials, and we'll say manage business unit. Okay, so this one is the task. Select it, go inside it, click on add. Here you will provide the name. Okay, the default set that I will explain what a default set is. Okay, so let us give the name. So I'll say ABC Corp. FS BU2. Okay, so let's say this is BU2 for the financial services. So according to that, I'm creating it. Okay, and location. So where is this particular operating facility located? So that is where you will have to provide the location. So now this location is also another setup. Okay, generally it is again done by the human capital management team who initiate the implementation. Okay, so they will populate all the locations that are applicable for the business, and then in turn you will be able to select that location here. Okay, from the list available. Okay, and then the manager. So manager is again something creation of the employee job designation, right? So that is again something that is done by human capital management team. And then in turn, the manager who is the employee who is the manager for this particular operational facility that you will have to select. Okay, now that is not mandatory. Okay, this is not mandatory, but yeah, in order to have certain other advanced functions, you might have to provide it. So in a real life business, definitely you will see this field being populated. Right now, for us to carry out the activities, it is not required. It is non-mandatory. Okay, so we are not providing it. Now, default set, this is mandatory. Now, what is this default set? This is another layer of a security concept in Oracle, which is called a reference data set. Okay. So now reference data set is a security layer, which is basically, which is basically in place to give access of certain data objects. Okay. Data related objects. For that, if the access is to be, provided, then a respective reference data set, or based on a reference data set, it is that access is provided. So just like in case of ledger, in order to have a ledger access, what did we have? We have the data access set, right? Similarly, in case of some other setups or some other data objects, like ledger, similar to that, there would be certain other data objects which are governed by the provision of a reference data set. So one such example, just for your understanding, I would say payment terms. Okay, payment terms that is being utilized in the payables. Okay, the payment terms is what? It is the payment term agreement between your supplier and you. Okay, wherein you would say that within next 30 days. Okay, once the invoice has been received within next 30 days or within next 10 days, the payments will become due. Okay, so that is governed based on the payment terms. Now, payment terms is a data object which is actually controlled by a reference data set. Okay, so all those business units that need the access to a certain type of payment terms will have to be associated with a reference data set. Okay, and then in turn, that reference data set access needs to be provided to all those users and all those roles which need to leverage that object. Okay, so now in case of business unit, okay, what is the default set that you want to assign with the business unit that you will have to assign? Generally, what is done is custom reference data sets are never assigned, okay, to the business unit. It is something called a common reference set. A name called common reference set is available, which is Oracle created or Oracle developed reference set, which actually gives access to everyone commonly across the instance. It doesn't restrict it. Okay, but because it is required from an architecture point of view, that is where they have created a common set which actually gives access. If that common set is assigned, it gives access to all. Okay, so default set is being assigned to govern, okay, at the business unit level, a default set is being assigned to govern all those data objects that needs to be leveraged by the business unit. And therefore, as a practice, you should assign the default set to be a common set. So search from here, give the reference data set code as COMMON, common. Now, if you search in your test instances that you are working on, if you search by the name common, you will find a lot many things. Okay, why? Because these are people who have created these. Okay, ideally you should never do that with the name as common, because it only confuses, and we might by mistake select the one that is not the system generated one or the Oracle defined one. Okay, so now how to identify which is the one that is Oracle defined one? For that, the system reference data set code will be common, okay, all in caps, and the reference data set name would be common set. This one is common, and the set is starting with small letter S. Okay, so this is the one that is the Oracle generated one. So this is the one that you need to select. Okay, and then save and close. So your BU is created. The BU which is under which the transaction needs to happen, that from the structural point of view, organization structure point of view, that is created. Now the next function, okay, the next task that you need to do with respect to the setups for the business unit is this one, which is called assign business unit business functions. Now, under this particular setup, what you basically do is you enable, okay, all those functions with respect to the underlying applications that you want to enable for this business unit. So let's say, for example, if AP module is going to be used, okay, and you want to configure the AP module for this business unit, then the functions related to AP module, that is, payments and invoicing, that has to be enabled for this business unit. And you would do that from this particular setup. Similarly, if this is the business unit where your receivable activities or receivable transactions are also managed, okay, then in that case, certain functions related to the receivable aspects, which make sure that you are able to do the invoicing and the receipt creation or customer management related to the receivable module can be done for this particular view. So that is where those function has to be enabled for this particular business unit from this task, assign business unit business function. Okay, so now we will first of all select the scope. So for this, you need to select the scope. So basically, scope means for which business unit are you going to do the setup. In case of general ledger, we have seen, right, when we were defining or we were completing the setups for the ledger, on the specify ledger option, we had to select the scope for the ledger on which we want to work. Okay, so similarly, in this case, the BU on which we want to work, that we have to select. So in our case, it is the new BU that we have created. Okay, that you need to select. So how do you select it? Similarly, go click on this scope URL, go inside the drop down, click on select and add, click on apply and go to task, and search for the BU that you have configured or created, the new BU that you have created. Okay, and what is the name of it? ABC Core FS BU2, right? Search it, and here you have selected. Okay, don't click on the URL because otherwise it would take you to the earlier page where you defined the business unit. Okay, rather just click on this, select the row, maybe and click on this blank area, or maybe just select on this left hand side corner. Okay, that will select the row and save and close. So the scope is selected and it will take you to that page where you need to assign the business functions. Okay, so as I mentioned, with respect to each application that you want to use for this particular BU, there are certain functions associated to it that you will have to enable. So this is the area. So what is it saying? Select all business functions that this business unit will perform. Okay, so payable related, payable invoicing and payable payment, you want to do it for this particular BU. So that is where you will have to enable this. Okay, just enable the checkbox, all those functions that you want to do. Similarly, if it is procurement activity that you want to do, you will have to enable this. Okay, project accounting, if you want to enable, then you will have to enable this. If it is the receiving that you want to enable for the procurement activities, then you will have to enable this. Similarly, for receivable activities, okay, you will have to enable this, the billing and revenue management. Okay, similarly, customer payments, you will have to enable. Okay, if it is the expense module that you want to use, then you will have to enable expense management. So now with respect to payable, we are looking at, okay. So if it is a P2P cycle, okay, if it is a P2P cycle for which you want to enable the this business unit, so you will have to enable the procurement as well as payment, payable invoice, invoicing, payable payments and everything. Okay, in a general implementation process. Okay, so this is the business unit under which the transactions are happening. Okay, and maybe under that, even the project activities would happen. Similarly, under that, the receivable activities also would happen. Similarly, payable activity would also happen because this is an operational site. This represents an operational site, and on an operational site, all these activities or functions may happen, and that is the reason you will have to enable it at the time of implementation. All those functions you will have to enable, and then you save and close. There is one more aspect that after enabling the functions, you need to associate this business unit, which is part of the enterprise structure, to the financial reporting structure. So that is where this section is there. And that is where you enable, okay, or you associate this particular business unit to a primary ledger under which the accounting needs to happen. Similarly, you will have to link it to a default legal entity, basically under which you have the operations carried out. Okay, so these are the two things that you will have to associate, mandatory things. Okay. So I'm not completing this. I will rather show you. Once you have enabled all those things and assigned the ledger and the default legal entity, you will simply click on save and close. I will show you the one that has already been configured. Okay. So let me select the insurance BU. See here. So for now, I have enabled all these functions for the insurance BU. In a real life business, you actually activate everything. Okay. All the checkboxes you would enable. And then the ledger. Okay. Ledger you have assigned. Legal entity, also associated legal entity under which this particular operational facility falls, that also you have assigned as a default legal entity, and then you would save and close. Okay. So these are the first two steps that you need to perform from a configurational aspect. All right, that's it for today, guys. We will continue with the other setups tomorrow, and we will understand the aspects. Now, time for questions.